All right, ladies and gentlemen, welcome to Online Master Trading. What I got for you today is I'm going to go ahead and break down a simple Forex strategy for you for weekly or daily trades even. Okay, so what I have here is first and foremost, I'm just going to run through the basic setup of the template and what it consists of and what you'll be paying attention to. All right, here we have the 15-minute chart spread out from here's going to be Monday, and here would be Friday of the last week, which is ending in October 23rd because today is Saturday morning. It is 11 a.m., 10:24. Yesterday was the 23rd, so we would see the week complete here. And of course, it began here on the 19th. If we wanted to take a look, we can also see it here on the weekly chart. This is that chart, that 15 minutes spread out from the 19th to the 23rd. Look at that. This trade was actually called in the group. So hopefully a lot of our members took advantage of that. This would have been the major drop Thursday night or Wednesday night, Thursday morning. Would have been this nice beauty. All right, but first and foremost, let me go ahead and show you the setup. Of course, we know red candles are bearish, which means they're heading in a downward movement. Green candles are bullish, which means it would be going in an upward movement. Of course, we know when it's going up, we're going to buy low. When it's going down, we're going to sell high. Okay, first and foremost. So that's pretty much what you look for here. Um, you go through the training videos and understand what the market is actually doing by understanding the market maker methods from Steve. It's about 4 days, 3 hours, 3 to 4 hours a piece. So it's about 12, good 15 hours worth of training materials. And then what you'll do is come here and really lock in and put it all to work. But you're going to need that basic knowledge first. If we see here, we have a small pin to the high. This was probably coming into London session. Right here, this movement probably was made coming into London session. This movement here would have been U.S. session. We see another railroad here. This would have been, let's look here. This would have been another London session reversal trend. But I'll show you how I'm able to identify that. We use a simple indicator setup, which is pretty much going to consist of, let's see, let me go ahead and set this up. Okay. Here we have a setup for you. All right. Now, what are these moving averages? Moving averages are just pretty much a compilation of data taken from these candles. We have the yellow, which is going to be most closely relation to price, and it's going to be the 5 moving average, as we see here. Okay, then we have the aqua here, which is going to be the 50 moving average. We have the red, which is going to be the 13. And we have the 200, which is going to be the white, which is referred to as the Mayo. The aqua would be referred to as the water. Okay, now as you see, price broke out extremely far from the Mayo, right? Which means it's in a strong down cycle. Okay, now here, price of course is going to drop close to the yellow, and the red is going to be in between the yellow and the aqua. Now, price breaks out, and then it pulls back in. Price breaks out, then it pulls back in. Now, once price comes back to the Mayo, we'll see it either cross over or break out again. But it's pretty much a change of cycle. Right now, it's in a down cycle. then it'll be an up cycle, then it'll be a down cycle. So once you get familiar with these type of price movements and price actions, you'll be able to better understand the gist of things. But that's just pretty reasonable explanation for what these moving averages are. Okay, we also take advantage of what we have here, and these are going to be the sessions. When you have the sessions, they're going to already be set up on your template when you download the Master Trader template. As a matter of fact, now I'm not going to go straight into it. Hold on one moment. I have to change the times on those. These are going to be the sessions. Okay. Sydney starts at 0, 3, 9, 15. Okay. And there we would have the sessions. Now, of course, you can change this. It'll all make sense when it's all said and done. But for now, let me go ahead and change that. Okay. Now we have the sessions in there. Now, with those sessions, what do we know about the sessions? Big movements happen at the open. Okay, so now we have Sydney, Tokyo, London, and New York. Zoom in a little bit. Now, here, what do you see? Sydney. Of course, we know it's going to range. Below, we have Tokyo. Now it's coming back up. We have London. Railroaded and dropped for the rest of the week. Okay, so these indicators here just pretty much separate the session times. Don't pay attention to any other indicators on my screen right now other than the session times. Okay, now let me go into the official template. Okay, so this is the same chart we just looked at. Tokyo, London, railroaded, dropped for the rest of the day. This is just for Friday's movement here. Friday began right here. Sydney session, Tokyo session, London session, New York session. Okay, so once you identify and are able to understand the market method from Steve's training, come here and utilize our strategy with the proper setup. Now, of course, you can take all the indicators off your screen, but all these indicators are here to specifically just point out key things like session times, the reversal patterns. The high is represented by this green bar. The low is represented by this orange bar. Daily low. Daily high. Okay. These other horizontal bars here, they match the color of the session. That's that open. That's where the session opened at. Market session, Tokyo opened. Market session, London opened. market session, New York open. Okay. This will also give you the range. Okay. Now, when we are understanding the range, we do know how much an pip is. A pip would be, if you look at this number here, a pip would be this, not this third number. It'll be 16 going to 17. That would be one pip. 63 going to 65 would be 2 micro pips. A pip is every 10th. So it'll be 10 micro pips is 1 pip. Okay, so when you see this range, 48 pips, you would be looking for a number 480. Like say for instance, you would be looking from 675 to 1,000. That would be roughly 400. So anywhere in there. So you got to understand what you're reading. This, you would be looking for a 480 difference between the last 3 digits. On the 102, you would be looking for 1,000 difference in micro pips. Right, 480, you would be looking for a 480 difference in micro pips. 48 pips, 102 pips, 172 pips. Yesterday it moved, Thursday it moved almost 1,720 pips. Fast. Okay. Micro pips, 172 full pips. So just keep that in mind when you're thinking about pips in correlation to what you're actually looking at in the market and what you should expect your target to be and so forth and so forth. Because it's not 172, that's 1,720 if you're looking for a complete difference in the full whole number. All right. Of course, here, what would indicate at the open of a session. At the open of a session, we are looking for the crosses. When we get a session open like Tokyo, or if not even necessarily a session open, because it's not always going to happen right at this time. It's going to happen 30 minutes before, 30 minutes after. Okay, right here we happen to get the indication 30 minutes prior. Got the arrow, we have a red candle, and we also have a reversal pattern here. We have it under the 5 moving average and miles and miles away from the yellow. From the male. So we know it's a strong opportunity for a pullback. Then we get down here and we do have an upcoming cross on the TDI. It didn't happen right when this happened, but if you would have identified this reversal pattern, known it's below the 5, it has to pull back to the male, and you would have been able to predetermine this cross coming. You could have entered here. Here would have been perfect too. You could have entered there right at the arrow, or you could have simply waited for a third confirmation here on the cross and got in later, and you would have still been able to take profit. Okay, now say for instance, now that would have been your trade for Tokyo session. That would have been it if you were doing Forex. That would have been your trade. If you were doing binary, you could of course take trades on each candle. But be safe, you could have got one great trade in per session. Okay, now we go here. London. What do we have? We have a reversal pattern, a railroad. Like I told you, the move is going to be made 30 minutes prior or 30 minutes after. This time it came here. We got the signal here. See that reversal pattern, railroad. We also got the cross on the TDI. We know what's within the proper movement time frame, 30 minutes before, 30 minutes after the open of the session. That's what this indicator is for, to help you identify the open, because timing is everything. All right, you could have rolled that pip up. You could have rolled that up. Okay, then here we get a indication that we get another reversal pattern with a signal. The water has been broken, but we know it's in a downtrend, so this arrow is valid. We also get a cross here on the TDI, so we know we can take that down again. So on London session, we got two trades, up here, boom, down here, and we would have cashed out another 1,000 pips. A lot of people on the team caught that trade. Hopefully you've been paying attention, because you should have gotten that trade as well. All right. Now, it's not smart to do, but you could have got out down here and got back in. I don't recommend getting back in, just take your profit and be good. That's 1,000 pips. You had a great day. You put the right size on it. That was, a definitely $1,000 to $5,000 week between here and here. Easy. So congratulations to anybody who caught that. And this would have been your exit, and you could be doing whatever you want to this weekend. Guys, this Forex is serious stuff. And that's just pretty much, the strategy. We have signals, identifying when to get in. Do not just take a trade because you see an arrow. Wait for all the proper setups. Session times, reversal patterns, TDI cross. Okay, focus on that. Over here in the top right, we have the current price. We have the current high in blue, current low in red, daily range in yellow, and micro pips. And all these up here are in micro pips, the distances. Okay. Also, we do have some pivots that we use. So let me go ahead and put those on there for you. Okay. Now with these pivots, what these pivots will do for you is, now it's going to be a little off because it's actually formulated for tomorrow or Monday, based on where it closed at today. Now, with pivots are key points for support and resistance. They do not repaint, and they're formulated on the previous day's data. So for instance, just like Steve Morrow said in the final video, pivots, we will either go up to M1 or M2, and then we'll come all the way back to S1, or we'll go down 2 levels to come back 3 levels. So just keep that in mind when you're going through the new day on pivots. Pivots are key points where you need to be identifying reversal or continuation patterns. Now let me give you guys an example of how we would do a 15-minute binary options trade, or how we would actually predetermine our entry. Here we would have, gotten a signal on a 15-minute chart. Okay, we know that. Now we would then, if we get a signal on a 15-minute chart, then all we have to do at that point is, now we know to be looking for the proper identification on the 1-minute chart. What do we have here? We have consolidation, we have the low, and we have a huge cross here on the TDI. Now look, I'm going to push this here. Now we know this is here. I'm going to also put a horizontal line. This is where we're at. So this would have been our entry. This could have been our entry if we've been paying attention. We got that trend on the 15 right here. Same point. We got a slight cross here on the TDI. Right here. Okay, 22.34. Now we go here on the 1 minute chart. 22.34. We would have got in right here, and we would have had an awesome, awesome, awesome ride to the top. Okay. Now, once you get good at identifying the highs and the lows of trends and 15-minute candles, you can then pick and choose every 15-minute candle and take a trade. So you can literally hop in any market, anytime, and place a trade. Now let's go to this 45 candle. Give you guys an example of that. Okay, so if we got the 45 candle started right here, or closed right here rather. But look at this. 45 candle. This would have been the low. Way up. Because this candle here, the last candle that we actually got the signal on, actually closed right here. Closed right here, then this new 15-minute candle opened, dropped down, but we would have already known we could get back in because we know the trend just changed. We know it's on an uptrend now. Look at this. Boom. So we would have got in here and rolled that whole 15-minute candle up. And it came up to at least right in here. So then we could have literally taken a trade. We know it's in an uptrend for the close of every 15-minute candle. Look at this. All we would have had to do was wait for signals and across. And when you really get good at it, you can even take the counters. Look at this. I mean, you're going to be able to identify which counters and which ones to take because that's what it all boils down to. It all comes down to your mental and what you're able to decipher from the charts. You don't have to take every trade. Take the ones you want. You don't have to click the button if you don't want to. It's very important. You do not have to trade if you do not want to. If you don't want that trade, don't take it. I'm going to enforce that. If you do not like the trade, do not take it. Wait for one you like. No one's making you put your money in the pot. You choose to put your money in the pot. Okay, now that's a quick little video there. Ladies and gentlemen, thank you for focusing in here on Master Trading Group. Thank you for watching and enjoy. Leave a comment below. Let us know how it works for you.